Look at EURUSD. EURUSD on the longer term time frame, right, was price on the long term, this daily fair value gap, right, for price to come back and touch this daily fair value gap, right? Remember the whole stuff where price reclaims a fair value gap, meaning price uses a fair value gap again. So price came here and then used this fair value gap that was already used here, right? It came back, used it again, right, and then drops. You get me? So now I'm just going to jump straight to 1 hour and I'm just going to point out something to you guys, right? Now, while price was basically here, right? While price was still around this avenue, while price was still here, that was last week, Monday, I think Tuesday too, where we're expecting, I think that's the CPI news or something, right? I pointed out this fair value gap, right? So this is the fair value gap. And then what happened? Then we saw price tapping here during CPI. This is the CPI candle. And then price bounced up from that fair value gap to grab liquidity here. So if you had entered here, liquidity grab and stuff now, some persons, after using this fair value gap now, after this fair value gap has been used, it's now of no importance. No. Now, what happens here is, what I wanted to show you guys is what happens if price doesn't use a fair value gap as a reclaim gap to go higher. And then price, maybe you had your entry in anticipation for a reclaim fair value gap and price destroyed it and, smashed your stop loss. And then should you give up on this level? No. Now, this is another concept that turns support into resistance or resistance into support. Now, it's called an IFVG, right? An IFVG. What's an IFVG? Inversion fair value gap. Once price breaks that fair value gap, always anticipate that place to hold price. You can see that price came here, right? And then dropped, came back here again and then dropped. Now, let's use for an instance. We have how many fair value gaps here, right? Now, this one is going to answer the question of which fair value gap is always important. Now, we have numerous fair value gaps here. We have 1 fair value gap, we have 2, we have 3, and we have 4, all in one price leg, right? So which one would you use as, and will you mark out as important? Exactly, the fair value gap that aligns and collides with the inversion fair value gap, right? This is the inversion fair value gap that was destroyed. Now, this fair value gap is an A+ fair value gap. You can see price literally in a sense, didn't tap into this fair value gap here, but you can see here, you see price tapped into it here. Now, upon that, let me now show you what makes it even more interesting. What makes it even more interesting is that previous day high was grabbed, right? So after previous day high was grabbed, what do you expect? You want to see price tank, and since then, it has been dropping from that level. So I just wanted to point out to this inversion fair value. I just saw it on the 1 hour time frame and I felt I should pull up the live stream and just show you guys what this is, right? So this is how you know which fair value gap to use, right? So when you have numerous fair value gaps, right, you look a little bit to the left, and this is an inversion fair value gap that held price. Remember that held price and then price destroyed it, and then you see price coming back there to use it. So it's more like changing support to resistance and resistance to support. Now, this is what I mean. This is, if you want to draw it out, more like a textbook stuff. All right. You want to draw it out. All right. So yeah. So let's say price was basically respecting bullish gap, and then price, this was the last fair value gap, right? This was the last fair value gap, and then last fair value gap before price drop. Like, let's say this is more like, you see, in this price leg, this is the last fair value gap before the liquidity, the last fair value gap before liquidity, right? So now this was more like the last fair value gap before this liquidity, and price then came or destroyed it. And then the inversion fair value gap is, want to see price use that to drop price, and also to have a high probability inversion fair value gap entry, you must make sure there is a fair value gap here, right? You must make sure there is a candlestick that has a fair value gap here, so that you can use that to take your trade here once price enters here, right? So this is just an example, right? This is just an example on this pair right now. So I just felt I should share it with you guys. So this is how you know when to use either a risk entry or whatnot. So let's start from this gap here up to the high of the candle that formed the gap, right? Or you can keep it above here, the first candle of the gap, which is more like 31 pips, right? 31 pips to get 60 pips, and yeah, that's like a clean 1:2. You get me? Remember, 1:2 is just the end, right? 1:2, right? Or you can just keep it above this high of this candle. You get me? Or if you want to even make it more cooler, you can keep it at the high of this inversion candle, this guy here. You just keep it there. And then that's where your SL will be, right? So that's just how it is, man. That's what I saw, and I felt that to just share it with you guys. It's something that has been printing on the chart, and it will continue printing on the chart, right? So far, we have candlesticks in our lifetime. It's going to come. It's not going to stop, right? So don't ever get scared when you see an inversion fair value gap like this. With a fair value gap, always make sure you take the entry, and it even aligns with liquidity graph, right? So yeah, remember the turtle soup entry that I showed you guys, right? This is the turtle soup entry. The turtle soup entry aligns perfectly with the gap where you can place your entry here, right at the liquidity, and it's still fair value gap. It's still an inversion. So a whole lot of things on this trade where someone could have just taken this trade stress free. You get me? So that's just what I wanted to just point out to you guys. This is just me pulling out little clips, and not just to bore you. Should point your focus to something on the chart so that you get registered into your subconscious. You get me? That's just how it is.